Have you ever had that feeling you've got this brilliant trading idea, like a really specific observation about the market, could work, but then you think, oh man, testing this is going to take months of programming.
Yeah, that exact barrier. It's just gone now.
Yeah.
Seriously. We're talking about taking that gut feeling, that intuition, and turning it into, like, professional automated code for an indicator. And doing it in minutes, okay? Not weeks.
Yeah.
Using simple English.
Welcome to the deep dive. Today, we're really going to dig into how artificial intelligence, we mean the big language models like ChatGPT, Claude, that kind of thing, how they're basically becoming a personal coder for traders everywhere.
Yeah, our mission for you today is pretty straightforward. We'll unpack how this actually works, the mechanics, we'll show you the prompts, the actual language you use, and we'll give you 5 really powerful indicators you can build right away. Doesn't matter if you're a scalper or a swing trader.
And stick around, because at the end, we'll lay out the exact 4 steps you can use to turn any market idea you have into working code.
Okay, let's unpack this a bit. I mean, traditionally, if you wanted custom tools, you had to dive deep into these specialized coding languages, like on TradingView, right? That meant learning PineScript.
Exactly. Which is, a whole thing in itself. But now, simple sentences can do the job. It's pretty wild. And what's really cool isn't just the time saving, though that's huge. It's how the AI takes your observation. Like maybe you notice, hey, the price keeps bouncing hard off the 200 moving average and turns that into a precise coded signal. It's like having this tireless assistant who never gets emotional, just executes 24/7.
We should probably clarify PineScript quickly. So PineScript, it's basically a coding language made specifically for building charts and strategies, mainly on TradingView. It's kind of the standard there, but yeah, it's still code. You got to learn it. Right. And being able to just sidestep learning all that code, that's the massive leap forward here. It's almost like playing with Lego blocks, stacking data bricks and telling the AI, build me this exact thing. So
Yeah.
what's the bottom line here for someone just trying to, turn their unique trading insight into something real?
I think it means the biggest hurdle to getting your strategy automated, which was always the coding part, well, just vanished.
Yeah. Your ability to clearly explain your idea, that's suddenly way more valuable than being a coding whiz.
Okay, let's dive into the first specific tool. We're calling it the relative momentum candle detector. See, most traders kind of get momentum wrong. They just see a long candle and think momentum.
Right, but a long candle only really matters if it's like unusually long compared to what's been happening right around it. It needs context.
Exactly. So the logic here is relative. The AI measures the current candle's length, just its high minus its low. Simple. Then it looks back at, say, the last 10 or maybe 14 candles, finds their average length. And here's the trigger. If the current candle is, let's say, 1.5 times, maybe even 2 times bigger than that recent average, boom, the AI flags it. That's a momentum candle.
And that signal, it usually means serious energy, maybe institutional buying or selling, just hit the market. The range expanded way more than normal. So it's super useful for scalpers, day traders, anyone looking for those quick bursts. Think of it like a smoke alarm for volatility.
Yeah, and some of the data we've seen suggests, in liquid markets anyway, maybe around 60% of these flagged candles actually lead to price continuing in that same direction for a bit. That's, a decent starting point for an edge.
Quick tip here when you're writing the prompt for the AI, if you're trading something really volatile, like certain cryptocurrencies, you might want to tell the AI to bump that multiplier up, maybe to 2.5x or even 3x, just to filter out the everyday choppiness.
Okay, that 60% continuation rate is interesting. But why not just trade based on that signal alone then? Why do we always hear you need to combine it with something like support and resistance levels?
Because context is king, always. Beat. That momentum signal hitting right at a known support or resistance level. That confirms the price reaction there is likely real. It's significant, not just random market noise. It gives you conviction. All right, indicator number 2, this one's called the 3-line strike pattern. And it tackles a really common frustration, missing those massive, out-of-nowhere reversal candles that just erase several days of price movement in one go.
Yeah, those can be painful to miss. The power here is in how specific the pattern is. It needs 4 exact things to line up. So first, you need 3 candles in a row, all the same color, say, 3 green candles pushing the price up.
Each one kind of pushing the trend along.
Wow.
Then, and this is the key part, you get a single fourth candle. It has to be the opposite color, so a red one in this case. And it needs to open beyond where the trend was going and then close below the low of the very first of those 3 green candles.
Wow, okay. So that one candle basically negates all the progress of the previous 3. That signals a huge rejection, right? A big shift.
Totally. It's a powerful rejection signal. So a smart way to use this, find a bullish 3-line strike. So 3 reds followed by a big green candle happening right at a major support level you've marked on your chart. That combination, often a really high probability entry.
And you'd want volume confirmation too.
Oh, absolutely. Always tell the AI that 4th candle, the strike candle, it needs high volume. That's the fuel that confirms the reversal has power behind it.
Now, recognizing these patterns manually, it can be tricky in real-time charts. Things get messy. How does having the AI do it help reduce, just human error?
Simple. Consistency. The AI applies that strict 4-part definition perfectly every single time. Your eyes might get tired, you might second guess. The AI just executes. It ensures you don't miss those really potent setups because of noise or fatigue.
Oh.
Okay, moving faster now. Indicator 3 is for the scalpers, tracking hourly opening range breakouts. Lots of traders watch the daily open range right, but this drills down to the hourly range. Much tighter opportunities.
Right. The core idea is pretty straightforward but can be effective. At the top of every hour, the AI looks at the very first 5-minute candle of that hour. It takes the high and low of that specific candle and draws a box. That's your initial range for the hour.
Yeah, the early battleground.
Yeah.
Now, the rule for entry, and you got to be really clear with the AI on this, is that you only take a trade when a candle closes fully outside that box.
Not just a wick poking out.
Nope. A wick is just testing the waters. A full candle close outside means conviction. It means the market decided to move beyond that initial range.
Okay, makes sense. And context matters here too, right? You wouldn't want to trade this during quiet hours.
Definitely not. You need to tell the AI to filter by time. The best signals, the ones with follow-through, usually happen during the busy London and New York sessions. Forget the quiet Asian session for this strategy.
And for managing the trade. Maybe stop loss just inside the box?
Yeah, that's a common approach. Stop inside the box. And maybe aim for a target that's, say, 1.5 times the height of the box itself. Gives you a decent risk-reward ratio.
I get why the close is important, confirms conviction. But isn't there still a risk? What if you get a strong close outside the box, you jump in, and the very next candle just reverses right back inside? The classic fake out.
That's always a risk in breakout trading, the fake breakout. Relying on the close helps minimize it. Like we said, it shows control was maintained for that period. But yeah, combining it with the time filter trading only in liquid hours helps ensure there's enough volume to potentially sustain the move. Nothing's foolproof, though.
All right, let's talk pin bars. The standard pin bar indicators you find on most platforms. Honestly, they often seem kind of useless. They just highlight every little candle with a tiny wick.
Exactly. They're way too noisy. To spot what might be like real institutional rejection, you need much stricter rules. Mathematical proportions.
So, indicator 4, the advanced pin bar scanner. What are these strict rules we tell the AI?
Okay, rule 1. The wick has got to be long. At least 3 times longer than the candle's body. Not just a little bit longer. 3 times.
Okay.
Rule 2. The body itself has to be small and pushed to one end. It must sit entirely within the top 25% or the bottom 25% of the total candle range, from the high of the wick to the low of the wick.
Got it. Long wick, small body at one end. But here's where it gets really clever, right? The volatility filter.
Yeah, this is key. We use the ATR, the average true range.
Let's quickly define ATR for everyone. ATR, average true range. It basically just measures how much the price is typically moving on average over a set period. Kind of gauges the current market energy level.
Perfect definition. So the AI adds this filter, the pin bar we just defined. Its total range from high to low must also be at least 1.2 times the current 20-period ATR.
Okay, so it has to be a proportionally correct pin bar, and it has to be a relatively large candle compared to recent volatility.
Exactly. This weeds out all those tiny, insignificant pin bars that form when the market's just dead quiet. Those don't usually mean much. We want pin bars that show a real fight happen, with significant range expansion.
And again, context is crucial. A pin bar meeting these strict criteria, but forming at, say, a major round number like $1,200 on a currency pair, or right at a key moving average. That's where it gets really interesting.
That's the sweet spot, pattern plus location confluence. Powerful stuff.
But wait, filtering so tightly, especially using something like ATR, doesn't that risk, curve fitting? Like, making the indicator look great on past data, but potentially fail when market conditions change dramatically.
It's a valid point, a concern with any filter. But the thinking here is that ATR isn't defining a fixed price level, it's measuring relative energy or effort. So a pin bar that's large relative to recent action suggests strong conviction by buyers or sellers at that price level, regardless of the overall volatility regime. It confirms they defended that barrier decisively with oomph. But yes, all parameters need occasional review. Okay, last one. Indicator 5. The gap fill detector. Gaps are pretty simple visually, right? Just empty space on the chart where today's open price is way higher than yesterday's high, or way lower than yesterday's low.
They leave a literal gap. And they often act like magnets.
Right.
Price seems drawn back to them.
Exactly. It's a well-known market tendency. Some studies suggest around 70% of these price gaps eventually get filled, meaning the price trades back into that empty gap area later on. That makes them a pretty reliable phenomenon to build a strategy around.
So how does the AI tool work for this?
It's mainly a visual aid, but a smart one. You tell the AI to find these gaps on a daily chart. When it finds one, it draws a box, maybe semi-transparent, covering that empty price range.
Okay.
And then it automatically extends that box horizontally to the right across future price action.
So it stays on your chart as a reminder of where that unfilled gap is.
Precisely.
Yeah.
But here's the neat part. The moment the live price touches any part of that box, any part of the gap area, the AI automatically stops drawing the extension or just removes the box entirely.
Because the gap has been filled, that's efficient.
Yep. Confirms the fill visually, instantly.
Okay, if the stats say 70% of gaps fill, why wouldn't a trader just automatically fade every gap? Like, if price gaps up, immediately short it, aiming for the fill. Seems like easy money, but what's the catch? What's the big mistake people make?
The big mistake is ignoring the possibility of a dap and go. Sometimes, especially in a strong trend, the market gaps up and just keeps running higher, leaving the gap unfilled for ages, maybe forever. Fading it blindly can blow up your account fast.
Right. So you can't just assume it will fill immediately.
Exactly. You need really tight risk control if you fade it. Or maybe you wait for some kind of confirmation signal first, like a reversal pattern forming after the gap, before you target the fill. Or you adopt a gap and go strategy yourself if the trend context is strong.
Mid-roll sponsor, read, placeholder. Okay, so we've covered 5 cool indicators you can build. But the real power here isn't just these specific tools, it's the process. There's like a recipe, a simple 4-step recipe for creating pretty much any trading tool you can imagine using AI. Step 1, and this is probably the most critical, you got to clarify your idea.
But
in plain English, no code talk. Just describe what you see, what you want the tool to find, like you're explaining it to another trader.
Step 2. Define the rules. Super important to be precise here. You need 3 parts. The trigger, what specific event makes the signal happen. The filter, what other conditions must be true. Think volume or ATR like we discussed, or maybe RSI level. And the confirmation, what confirms the signal is valid, like a candle closing.
Step 3, specify the look. Just tell the AI how you want it to show up on your chart. You want red down arrows, green boxes, shaded areas. Be specific.
And step 4, the one people often skip but shouldn't. Test and improve. Your first attempt, your first prompt. It probably won't be perfect. The AI might misunderstand something.
Vulnerable admission. Oh yeah. I still wrestle with prompt drift myself, especially building more complex things. The AI's first output might, get the trigger right but miss the filter. So you got to test it, see where it messes up, and then go back to the AI and refine the prompt. Like saying, hey, the alert is firing too often. Can you add a filter so it only alerts if the RSI is below 30?
Exactly. That iterative refinement, that back and forth conversation with the AI, that's the new skill. And the really sophisticated traders, they add even more advanced layers, like always demanding volume confirmation, seeing volume as the fuel behind the move, low volume signal, probably ignore it.
Or using time-based filtering, like we talked about with the hourly range breakout. Making sure breakout strategies only trigger during peak liquidity hours like London or New York.
And multi-time frame analysis is huge.
Yeah.
You might get a great-looking 5-minute buy signal from your AI tool.
But if you zoom out to the daily chart and see you're right under massive resistance, maybe not such a great signal after all. It's like, you got to check the city map before you navigate a single street, right?
Totally. Context is everything. Whoa, hang on. Just thinking, imagine scaling this. You teach the AI dozens, hundreds of these specific pattern rules, and then unleash it across thousands of instruments, multiple time frames, all running constantly. The potential for systematic analysis is kind of staggering, actually.
It really is. So with the AI doing so much of the heavy lifting, now the coding, the execution, what's the most crucial skill left for the human trader? What do we need to keep sharp in this new era?
I think it comes back to observation, the ability to spot new patterns, new market dynamics, things that AI hasn't been explicitly told about yet, and then being able to clearly articulate that observation, that novel idea to the AI. That's the human edge.
So the big takeaway here, the core idea from our deep dive today, is that this AI revolution in trading, it's genuinely leveling the playing field. Your success is becoming less about your coding skills and much more about the quality, the clarity of your market insights.
Yeah, exactly. The AI is your tireless coder, your emotionless signal detector, working 24/7 based on your rules. The traders who adapt now, who embrace AI as this incredibly powerful assistant, they're going to gain a serious edge, I think, a lasting one.
It makes you wonder, if AI can build these complex filtered tools just from us describing them in English, what happens next? What happens when we start pointing AI not just at coding tasks, but at the task of generating the novel trading ideas themselves? That feels like the next big frontier.
Absolutely. The only real limit now is your imagination. So go on, start building that first AI indicator today. See what you can create.